Hey guys, welcome back to the channel. In this video, we are gonna reanalyze my NQ loss. That's right, because I think if we reanalyze and check ourselves, it will help us in the future in avoiding such trades. So, with that being said, let's go ahead and go on to the daily time frame and start our daily start our top-down analysis. So on the daily, you can see we have two FVGs. One is at the bottom, one is at the top. Keeping it simple, price went into this one, which is an internal FVG here, internal liquidity area. And then from there, I expect it to look for something, towards in the other direction, and a liquidity area, and then move again to the upside. That's basically the idea. So this thing in itself tells me that gives me a bearish kind of bias. Sorry. So bearish bias, and I'm getting a bearish bias from my daily. Now I am heading into my hourly time frame, and in here I'm gonna mark whatever I see. So I am marking these levels, which are liquidity levels or swing lows, you can say, and swing lows, swing highs. These areas I have marked it, and in case the price comes over there, so I expect a reaction. But this is the start of Friday, okay? And I can see there's an FVG that comes from here. I have marked it, and above it there's a auto block. So yeah, a resistance area. And in here towards the bottom, we have these um, swing points where we can say that they are liquidity levels. And from here, not much than this. If we go on to 5 minutes now for our execution, we see price starts Friday starts from here. The black line is my mark of the Friday, and then it goes like this. And my entry was around this 20,290 area. So again, I saw that the price was trying to go towards the lower areas, and I was thinking that it will approach these liquidity areas and then bounce from there. But what ended up happening is it came down and broke this trend line right here, and I entered somewhere around here to 90, and then it pushed to the upside, came back down. I was maybe in profit a little bit, and then it stalled for many hours together. And I think this trade was on for 6 hours, more than 6 hours, and then finally I closed it when it broke this high. When it broke this high, it was obvious to me that now it is in too much loss, like $200, and for some reason there was the stop loss did not. Um, I kept my stop loss, but I think I accidentally closed the stop loss because I had put a limit order as well. So there were two orders that I wanted to get in, but and then I deleted the limit order, and the cross button that comes up here, I pressed the wrong one, and it took out the stop loss for that trade as well. So it kept going up, and then once it reached this area, I was around $200 loss, and I did expect it to retrace from around here, this top. So I entered here and made some profits and closed the trade overall in some profit, but I would not say it was a good move or it was a calculated move, but I could say that I had kept around $500 for this trade, which I took here, that if it goes negative 500, I will close everything out, and then I would have been around maybe $700 loss, which would have been a major loss. But I avoided that. It reacted from here and it came down, and once I was in some profit, I closed it. But overall, what ended up happening is Then once it broke from here, it ended up forming another unicorn setup. You can see it came down, took this liquidity area, or you can say stop hunt, and then it went to the upside and stalled a little bit, and then big candles came in. And usually these breakers and should be aligned with a higher time frame. So if we go on a 15 minutes time frame over here, we can say I don't see anything, and then we go on 30 minutes. There's an FVG and an order block at the bottom, so still an order block over here, and then we go on 1 hour. So price went from here. So this is the thing. So basically price did move in my bias, but my entry was wrong. I should have entered somewhere near to this FEG, and once it came here, you can see that on the, if we move on to the 1 minute time frame, around here, yeah, this is where it stalled, and it came at the top here, and we can see now it is happening, all this is happening near to the bearish FVG here, and this one took liquidity, stop hunted here, and came very near to the bearish FVG, and then broke structure with an FVG. You can see it right here, an FVG, an obvious FVG here, and then it came back around here. We entered, the stop loss would have been somewhere around here, and then it continued the down rally. So this would have been a perfect trade if we had entered somewhere around here, and then again it gave another entry here. You can see a breaker block. It broke this low and then came back into the FVG, and yeah, a nice move thereafter in my bias direction, but we entered at the wrong place at the wrong time. Okay, so this needs to be kept in check, that the bias can be in your favor, and I think I did enter this in a kind of a not in a proper way. My higher time point of interest should have been very near, or the breaker block should have been over it. I mean, it should have formed within it, but it did not, and I entered somewhere here in the no man's land. It was not a good trade. So in the future, what I learned from this is I should be trading in the point of interest from the higher time frame, and then wait for price to show its pattern, and then we can do whatever we have to do. So this is it for the for this NQ loss. So it's very clear to me where I went wrong. I went wrong because it was not a proper setup over here. There was no proper unicorn setup. I was trying to trade the unicorn setup. There was no proper unicorn setup. Plus, I did not enter at a higher time frame point of interest, because when you go onto your execution time frame, your execution and your breaker and your liquidity area should be aligned with the high time frame point of interest. Okay, so it exactly did that. My point of interest would have been either these lines, okay, because they were liquidity areas, or this area. This was also a liquidity area. It came at the top and it took this liquidity over here. Let's say, let's mark this up. It took this liquidity and then started going to the downside. It was the previous day high. Basically, it was the previous day high, or was it? So Thursday, okay, no, it was not the previous day high, but this was the previous day high. Yeah. So this was not, but this was a swing high. This point would have been an interesting point. So, and if we waited and for price to reach there and then we traded out of it, then it would have been a much profitable trade, because the bias overall was bearish, and it did go into it did trade in our bias. It did trade in the direction of our bias. So I think that's it for this video, and we are very clear as to where we went wrong and what we could avoid in the future. So take care for now, and see you next time.